Yo, what is good, traders? So welcome back to the channel where hopefully you're about to level up your trading game like never before. Just picture this. You're sitting at your desk ready to crush it with a $50,000 trading account or a $100,000 trading account, or why not a $200,000 trading account? And here's the wild part. Not a single cent of it is your own cash. You're not risking your hard-earned savings. There's no gut punching losses that make you fucking punch holes through walls like I've done before. And it sounds like a total dream, right? But in 2025, funded accounts from prop firms are making this straight up a reality. And I'm here to drop the ultimate A to Z guide to help you dominate these challenges. So today, I'm gonna give you a full playbook on how to pass these funded account challenges and hopefully get some payouts, right? And just unlock massive trading capital without putting your own money on the line. So if you're just now getting into trading, grinding to learn the ropes, so you don't have a fat stack of cash, like I didn't, to risk, right? So this is your golden ticket, man. We're talking like literally, like with another $100 with pocket change, right? You can scale up funded accounts, right? Worth 5,000, 10,000, even more, man. And it's absolutely crazy what is possible these days. So as long as you guys are good at trading, right? That is a requirement. You're good to go. But why funded accounts, right? Why funded accounts? Even if you have money, right? These are the ultimate cheat codes for new traders. Prop firms let you prove you're a profitable trader without betting your own bankroll. So you pass their challenge and you're trading their capital, basically, keeping a chunk of the profits. Now, you get payouts as well. So they will pay you out from their pocket. So your own wallet stays safe at the same time. So it's a win-win scenario. And in this video, I'm gonna break down everything you need, man. The killer strategies I use to trade that you will use to pass your prop firm challenges and get payouts at the same time, right? And we're gonna go over the rules, how these funded accounts actually work and the must-knows, because they're not just handing you $50,000 to trade with, right? That would be absolutely retarded, all right? Not being like, oh, have fun, bro. There's your profit targets, there's your drawdown limits. Like, you have to nail the rules, you have to nail the strategy. And I have made a bunch of money trading live accounts because I had the capital to go big, right? But I get it, most of you guys are still starting small, and maybe with just a couple $100, you can make a lot of money. That's what funded accounts are freaking clutch, bro. They will literally let you skip the slow grind and jump right into trading serious money, right? And I'm gonna show you guys how to start with less than $100, bro. Stay disciplined and scale up fast. Plus, I'll drop some psychology hacks I've used to keep my head straight, especially when the market's in a tough cycle, right? When the market's just throwing straight heat at you. So with all that being said, smash the like button, please subscribe. Honestly, it make me so happy. It doesn't cost anything. Let's just go. Let's just fucking go.
So let's get straight into the rules of the prop firm first. So we're going to be talking about peak funding here, and you can get started with a very, very small amount of capital, right? So going down here to check out the rules, we'll check out the prices first. So I'm going to link a 50% off discount code for peak funding. I'll put it down below in the description, and it will expire soon, but you can go ahead and take advantage of it right now. Whenever you're watching this video, there might be a new one up currently, but I want you to buy the cheapest challenge first if you're new, right? Half $100 would be $50. If it's $100, pay the $100 and actually buy this evaluation account as your first account. Practice, go buy 10. I don't care how much money you have. Do one account, the cheap account first, because you're gonna learn. You're not gonna get a payout on your first account. You're gonna blow the account and you're gonna learn. And that's exactly what we're gonna be going over in this video. So don't expect to get a payout your first account, because you're not going to, man. You're not going to. It will take you plenty of accounts, and especially if your psychology is not in check, which we'll be going over some tips, you're going to fail a lot. And that's just how you learn. You fail, you learn, you fail, you learn. So you're going to go ahead and buy the most cheap account you can find at any prop firm. This is the one I'm using an example of right here, peak funding. But you have no time limit, no minimum trading days. So all you have to do with the 25K account, right? You have to have a profit target of 6% and a max total drawdown of 4%, meaning that you have to get 6% of this account to pass, and you cannot lose more than 4%. That trails up to you until there's certain balance. So you can actually draw something out right here to have it make sense for you guys. Now, you have a 25K account, right? Let's just do 50K to make it kind of easy on this, right? You have a 50K account, and then you have a 6% profit target and a 4% drawdown, meaning to pass this account, right, and move on to the actual funded account, you need to get a 6% profit target, meaning that you need to make 3K on this account to pass, right? You need to make 3K, you pass, right? You make 3K, you pass. And if you lose, right, what's the drawdown? 4%, meaning if you lose 2K, right, you fail the account. So you have to make 3K before you lose 2K to actually pass the account. A couple of other rules will go with this as well, right? That drawdown, that 4% drawdown will scale, will trail with you end of day, meaning the trading day is over, that drawdown will still stay at 4%. It will scale with you until you reach the initial balance of the account. So meaning with the 50K account, let's say you make $1,000 and your balance after one day is $51,000, right? That's your balance after the first day. Now your drawdown was 2K below, was at 48, but now that the day is closed and your new balance is $51,000, your drawdown is also going to go up another $1,000. We'll say at 4%, right? So 4% from this, right, will be at 49K. It's still minus that 2K, but instead of 48, now it's 49 because your account is at 51, meaning that if you get to 49K, your account is blown, right? Your profit target won't move. It will stay at that 3K no matter what. Now, this drawdown will actually stop once it reaches 50K. So whenever you make 52K, your drawdown will then go into 50K, meaning if you go below 50K, you lose your account. But it will stay there. I mean, if you go up to, $52,500, it's not going to go up to 50.5. It's going to stay at 50.5 the whole time whenever you reach your initial balance. That's how the drawdown and profit targets work, right? You have that account, you need to hit the profit target before you hit the drawdown, and that's it. Now, there's one more rule before you can actually do this. Now, with peak funding, there is evaluation and funded accounts. Funded accounts, as you can tell, are a little bit more expensive because with an evaluation account, you have to take a test account first. They give you a first account, you have to hit your profit target, right? And once you hit your profit target, you get into the live funded account, meaning that all the money you make in that funded account, you can actually put into your own pocket. Now, with a funded account, right, you skip the evaluation basically. You pay a little extra and you skip the evaluation. I recommend if you're new, you do the evaluation. Use it as practice. Use it as to gain the skill, to practice, to lose, right, and then learn. But if you're a little bit more professional, you want to skip the eval, recommend you do. You go ahead and go for the funded accounts instead. Now, these accounts have consistency targets, right? Consistency requirements. So with the eval account, we'll do eval and then we'll name the other one instant funded. You have a 50% consistency target, right? Meaning that if with the 50K account, your profit target is 3K, right? You cannot make more than half of this, right? 50% in one day. Meaning that if you make, I don't know, $2,000 in one day, you have to make $2,000 the next day as well. So your consistency stays below 50%, right? But with the most amount you can make a day with the 50% consistency is $1,500, right? It's 50% of your profit target. So 50K account, right? It's 3,000. You can't make more than half of that in one day. Now with the instant funded accounts, you practice real risk management is 20%, meaning that one trading day, you cannot make more than 20% of your profit target, which is $3,000, right? Now, this is to enforce consistency, right? If you're trading a real account, you're not going to be full porting. You need to be making small amounts every single day. It has to be consistent, has to be scalable, and has to be realistic and make sense. Because if we want to award traders who actually are consistent, right? Who actually have a proven strategy that aren't full porting. So with the instant account, to get a payout, you have to have 5 days, right? 5 days, right, of 20% of the account, and you can take a payout. That's it. These are the only rules. So you have the profit target, you have the drawdown, and you have the consistency requirement that we just talked about. Now with the eval phase, with the 50% consistency target, once you pass that account, you go into the funded account. So it's going to be the same rules, right? Eval, you pass, you go into the funded account, or you can pay to skip the eval and just be right at the funded account. But those are the rules. That's it. It's simple, right? You have the consistency, you have the profit target, you have the drawdown, and that's it. This is the leverage you can trade with the account. So with the small account, you can only trade 1 mini. With all the $200,000 account, you can trade 9 minis, right? Which is pretty insane leverage. Don't recommend you max your size out at all. Start with the micros. The micros are 1/10 of the position, right? Start with the micros. Now, this is what you're going to be doing. I'm going to tell you exactly how you should be trading these accounts, eval accounts to actually pass, and the funded accounts to get a payout, right? So remember, if you're on the small account, I'm assuming most of y'all are going to start with the 25K account, right? You can either trade 1 mini, meaning that every 10 points the market makes, right, you're losing about $500 or making about $500, right? Because 1 mini on the ES, for example, right, 1 point the ES moves is $50. So if it moves 10 points, right, it's $500. So 1 mini might be too much leverage. So instead of using 1 mini, I recommend you use 5 micros. Now the micros, MES, are 1/10 of the leverage, meaning that every point it moves is not going to be $50, it's going to be $5, right? So for a 10-point move, it's only $50. And this is the leverage you have to have. Remember, with a 25K account, right, your drawdown is going to be 4%. So your drawdown is going to be $1,500, right? That is a pretty small drawdown. You don't have the whole 25K account. You have the drawdown of $1,500. You have to play your risk according to that $1,500. So if 5 MES, 5 micros and 25K account is perfect. It's beautiful, meaning you aim for 10, 20 points a day, you make that small amount of money and you slowly scale up. As you start to get better, more consistent, more confident, you can then start adding more contracts. But to start off, You don't want to blow account after account after account because they'll stack up. You want to play small size, you want to play cheap accounts, and eventually you can scale up, right? Eventually you can scale up to the amount of money you want to have. Now, I'm going to give you the strategy that I want you to use. So this strategy won't happen too often, right? But it'll happen every week. And it's going to be hard for you to actually stick with only this strategy. But trust me, if you only stick with this strategy, you will make money. And you will be actually able to be financially successful with prop firms because you're sticking to one strategy that you know works. And it's simple. I'm going to give it to you right here. The hard part is going to be actually sticking to that strategy and not full porting or getting bored and like just dreaming of making a quick buck. So you buy 10 accounts and you just trade whatever you want to see because you're gambling, trying to get lucky and get a quick payout. There's no point. You're better off just going and playing the lottery. So to break down the only strategy, if you're new, that I want you to use is going to be my famous 4-hour, 30-minute, 5-minute fade. So what you want to do for this is go into the 4-hour chart. Now I only trade ES. I want you to only focus on ES. It'll give you plenty of opportunity. It's very liquid, especially if you trade in the New York Open or the New York Close. Even good London Asian session is not bad sometimes as well. But what I want you to do is go into the 4-hour session and identify the current trend of the market. Meaning, is the market, right, bullish, which is currently just went from a bearish to a bullish structure. So is the market bullish, right? Is the market bearish? Or are we in a choppy like consolidation period with no clear direction? That's what I want you to identify. Now, if you are choppy, best case scenario, what I want you to do is just avoid these sessions or just drop your size. We're going to be talking about the A+ setups, which is what you need to do to actually make money from these prop firms. Is you want to have the market be trending. You want to have it bullish or bearish. So all you're looking for when you're zooming in here, guys, is you want to see if the market has, 3 lower lows and 2 lower highs, which is a bearish market, or 3 higher highs and 2 lower lows, which is a bullish market, or 2 higher lows. Sorry, 3 higher highs, 2 higher lows, bullish market. 3 lower lows and 2 lower highs will be a bearish market. That's all I want you to do. Step number 1, right? We identified that. Let's go over the steps here again. So step number 1, what do we know? Market condition, market structure, market sentiment. So we were bearish. We just made a new high, but overall, right? Overall, we were very, very bullish. So we just kind of closed above a new high. So for this market, we're at all-time high. So all-time high is tricky. But what we're going to do is we're going to make sure to label this market as a bullish market. So, right, first step, market is with the bulls. And I have a full course on this, guys, in-depth 2-hour-long video on my channel. Go check it out. I'll link it down below in the description if you want more in-depth. I'm going to give you the only strategy you need to know right here. And now what we do is go on to the 30-minute time frame and find our key levels, right? We want to do something in the 30-minute time frame. So we want to find supply levels and demand levels. Now that we know the 4-hour chart is bullish, we only want to be going for longs. We want to follow the 4-hour sentiment for an A+ setup, right? So you know the sentiment's bullish, so we want to look for our key levels where we're going to place trades. So for that, we need to find supply and demand levels. I have videos on my channel how to find these levels, but let's walk you through real quick. You want to find big moves up or down on the chart and mark out the consolidation or the neutral candle right before the big move. So right here, we have a big demand we just made today, right? And then right over here, right, what do we see over here? We have a sharp move down. For that, we see some consolidations. We have supply right here. Now, all-time high targets is tough, really tough. And I'll talk to you about what I use to actually get these targets and get these things going. So now we have these levels. The next thing we need to do is go on to the 5-minute time frame, right, and find our entries. Now for that, we're going to use a couple things. Now, I'm going to break something down because we're all at all-time highs. And for targets, it's important. We need to know exactly what we're targeting, right? We'll get into that in a second at all-time highs. But the next thing, once this is done, right, go ahead and zoom out here so we can put down step 2. So step 2, we found our levels, right? Step 2, 30 min. Oh my goodness, min for the levels, right? We'll just draw 30 min L for levels, so you'll know what that means. Now we go into the 5-minute time frame and we look for our entries. So what we want to do since we're looking for longs is we don't want to play short. So what we need to do is find break retest of supplies, right? That's what we want to see, break retest of supply. So for this entry, we're waiting for supply to be broken. Now, a couple things need to happen here. We need to see a 5-minute candle, always executing the 5-minute chart, close above supply. That's step number 1, right? Now, once we see a 5-minute candle close above supply, the candle has to have increased volume. We need to see higher volume. So kind of what we did here, and it's a good example today, actually, with news and everything. Let's go back to the 30-minute and I'll show you exactly what we did today. So do you guys see a supply level, right? Do you guys see a supply level right here on the 30-minute time frame chart, right? let's go back to 30-minute right here. All right, so where is the current supply level on this chart, right? Right here, we have a neutral candle before a big drop down. So this supply level right here is what I want to focus on. We also have another one right here, but that one got ripped off. Let's just talk about this one down here. So we have a little bit of a small neutral candle before an aggressive move down. We did tap back into it. Volume looks good. So we'll go ahead and mark this box out. All right, we just made demand. Oh, just made demand right here today as well, but we'll skip that for a little bit later. Right, so supply right here, we have an aggressive close above supply where the volume picked up a little bit. We come back in and we retest supply, right? We retest supply. And then what you do is you wait for the retest. This is your entry when you break. Remember, it has to be at the 4-hour. You have to have above a supply level, close above in the 5-minute with increased volume, and it has to retest that level. Right here, we retest a VWAP, so it was perfect. Then after that's done, you paste your long position after you get the retest. And I'll show you exactly what we need for entries. We're going to be using Bookmap, but we'll use that in a second, right? You place your entry, stop loss, and you target whatever's coming next. The next level of liquidity, the next supply level. So for an instance, on this trade, I probably would have targeted this key level right here, right? It would have been the 50s. 50s is a big psychological level. We would have targeted this right here. Then your stop loss is going to be at the low of the retest, the exact low. Because if you make a new lower low, after the retest, the market's not going to go in any direction anymore, and that's your validation point. That's when you get out. You have to make sure it's at least a 2-to-1 every single time. And if it is, you're good to go. This is your trade. This is what you're going to do for longs. Now, on the other side, right, when we have, delete this, off of demand. Now that we know what we do for a break retest, we'll go over the targets for a break retest of all-time highs here in a second. What do we do on the other hand for demand levels, right? And when the market is in a bearish strategy, you're going to do exactly what I'm doing now, but you're going to flip the script. So instead of looking for breaks of supply, you're going to look for shorts off supply and breaks of demand for shorts. But now the market's bullish. Let's talk about the bulls. So you wait for the market to push up. Now, with the break of supply, what's already happening? The 5-minute structure breaking supply is bullish, higher highs, higher lows. But as we're selling off into demand, what happens to the 5-minute structure, right? When we're moving down, we're going to have a bearish structure with lower highs and lower lows. So before you enter off demand, you need to wait for confirmation. You need to wait for the 5-minute structure to make a new high, a new higher high, and a new higher low. Whenever you see that higher high formed and that higher low formed, you're then ready to place a trigger or your entry. And your entry usually has to be, you want it to be at that first higher low. The first higher low it made is where you want your entry to be, because that's where you're going to be putting your stop loss, right below the higher low. Why? Because if that's not a higher low and the market comes down and makes a new low, right? A new lower low from this previous higher low. I know it's confusing, you stick with me. Your trade is invalid. Your thesis of the market going up from demand is no longer working. Remember, no strategy works 100% of the time. But if you wait for all these confluences, it has a damn good accuracy. So that's the first step in demand. That's the difference, right? Because if we're breaking supply, we're already bullish in the 5-minute. But if we are bouncing demand, because we're moving down into demand, we are bearish. So be very, very thoughtful of that so you understand exactly what's happening, right? So just go ahead and delete most of these. Delete most of these drawings. Now, when you're going to target, what do we target for all-time highs if there's nothing to target, right? For bounces off demand, right, we can target the highs, we can target VWAP, a lot to target, right? What I would have done for that trade is target VWAP, which is one of my biggest targets. Remember, it has to be 2-to-1 every single time. At all-time high, what do we target? Let's just pretend this is all-time high, the highest on there. So let's go back and write down. Did I delete the steps? Or is it super far up? I guess I deleted the steps. But step number 3 is completed. We go to the 5-minute and we wait for a level to be hit, and we wait for either a break retest of supply or a bounce off demand with the 5-minute structure shifting in our direction. Before we get into the entry triggers off Bookmap, only one entry trigger I want you to use. We're going to get into how are we actually going to find these levels to target on all-time high. So what we want to do if we're at all-time high is zoom out into the 30-minute chart. I do this on the 30-minute. Oh, no. These are still here. These are still here. All right. So 30-minute time frame, and you want to go back. You can go back as much as you really want, right? For me, I like to just look at the last low we made in the bearish structure before we started to switch back to bullish. So what that means is the last time we were really bearish, right? We had a bearish run here for liquidity and a bearish run here for liquidity. Now we haven't actually confirmed us holding these highs yet. So I'm going to use this one right here. We haven't actually made a new high yet either. So I'm going to use this last move right here. So what you want to do is you want to get out your Fibonacci tools. Now, to get your Fibonacci, so I'm going to use a Fibonacci extension. So this is called trend-based extension, but Fibonacci extension is what you want to use. You want to go to that last bearish low. So the last low we made on that bearish time, or the bearish trend we were in. You want to mark out that low. You want to mark out the all-time high. You want to mark out the previous low. So it could be like, for instance, if this didn't make a move down, you could have just done this low right here. Since this did make a move down, we're going to get this low right here. And these will be your take profit levels if you're going long after a break of all-time high, right? You want to target the closest one. So all-time high is right at 50. You want to be targeting this right here, the 61%. And that will be your target after we break all-time high. That's how you do it, right? Now, let's go ahead and jump into the entry triggers. What entry triggers are we going to use when we actually make a move into supply or demand and looking for that entry? Remember, that low, the structure shift in 5 minutes is super, super important. But the biggest thing is Bookmap. Bookmap, right? We're going to go for simple entry triggers. I have whole videos on Bookmap, and I'm going to give you a quick explanation of what that means and how to use it. So with Bookmap, obviously you have the green are the aggressive buyers, the red are the aggressive sellers. Then you have the passive offers. Above price, they're passive sellers. Below price, they're passive buyers. It's very, very simple. Passive means they're limited orders. Aggressive means they're market orders coming into the market. So let's use an example for a short, right? What the first thing you want to do for a short setup, right, is wait for buyers either to get exhausted or absorbed. Now, what does that mean? So I want buyers to start getting thinner and thinner. I want, as we're moving up into supply, I want to see the buyers, these green circles, get smaller and smaller and smaller and skinnier and skinnier. The next thing I want to do is see a aggressive seller fill a passive buyer. So I want to see an aggressive seller like this, fill an order, fill a passive buyer, and then make a lower price. That's it. So whenever I see here, buyers get exhausted, as you can tell, they were big, then they got thinned out, sellers started to step in, then exhaustion from buyers. And whenever a seller fills a passive buy offer and we make a lower price point, right? What happened here? We filled an offer, but we didn't make a lower price point. What about here? Filled an offer, then we make a lower price point. Then I'm in, putting my stop loss above and my take profit, the next liquidity level, view up, whatever it is, right? You can also use absorption. So what that means is you want to see a big buyer, this is again for shorts, a big buyer try to attempt to fill passive sell offers, but not make any higher prices. You want to see absorption, right? This buyer got absorbed by these passive sellers to not make a higher price. Then you wait for the same thing. You wait for a seller to fill a passive buy offer and make a lower price. This one didn't make one. This one did. And that's your signal for entry. That's all I want you to do, guys. It's all I want you to do. Every single day you come into the market. That's what I want you to do. This is a break retest of the level we just called out, right? Buyers were in control. We broke out to that supply level, right? This was earlier today. What happens then? We move down. We move down. Every time we move down, what do we see? Exhaustion from sellers. And whenever we fill a big offer, we filled one right here, make a bid above, filled one right here, and make a bid above. We're in, stop loss at the exhaustion, and then our take profit, whatever the next liquidity level is. That's it, guys. It's that simple to do and that simple to use. Hopefully you learned a lot from this video. Hopefully you'll get your first payout soon. Comes with time, comes with execution. Not making any claims here, but if you really lock to it, stick with it, build discipline, you will get to exactly where you want to get to. Now, guys, some quick tips before I let you go, man. And again, this is super important because these prop firms can get crazy. You can get a sense of addiction, a sense of dopamine that you've never gotten before by seeing such large numbers jump up and down. What I want you to do is lock in. What I want you to do is be focused on the process, right? Focus on the process and not the profits. You will be getting a hit of dopamine every time you make money, and you will get addicted to that dopamine, right? But one day you'll lose money, and guess what? You still want that dopamine. You're addicted. You need to have it. So you'll force trades. You'll go and go and go until you make some money. So you get that rush. It's like cocaine, bro. Until you get that rush, right? So what I want you to do is, instead of being addicted and having a dopamine hit from the profits, you have to shift your mindset to getting that dopamine hit from the system, right? Not from the profits, from the system. Meaning that every single day that you follow your system, you'll feel good about yourself. You'll get that dopamine hit. No matter if you win or lose money, because in trading, you're going to lose money. No one has 100% win rate. It's impossible. So if you miss that dopamine and you're addicted to that rush you get from making money, like a gambler is, right? Gambling's a huge issue. Every time you lose, you're going to chase that dopamine. You're going to chase that drug, chase the dragon. But if the dopamine hit and the dopamine rush comes from following your plan, everything changes and you become profitable, right? So make sure you have a system in place. Make sure you have a plan in place. Stop at 1 loss per day. Most of y'all, like I stop at 3 losses per day because I've been doing this for a while, but most of y'all has to stop at 1 loss per day. After 1 loss, if you feel like shit, if you're sad, if you're depressed, walk the fuck away because you're going to lose your account. This is a long-term game, and your main focus should be on surviving for as long as possible. Most of y'all are working plenty of jobs, you're in school, and you need money to live. So if you're burning your money through these prop firm accounts over and over and over again, you're really limiting your time frame, because one day your money's going to go and you're not going to have more to put into the market, and you're going to have to give up, right? So if you widen that, slow it down, small size, cheap accounts until you build consistency, then you size up, right? Then you'll be alive. You'll stay alive. You'll have more money to stay alive and not risking it all at the beginning. That happens to so many people, guys. Don't give up. The only difference for me and you is that when things got hard, I didn't give up. So if you don't give up when things get hard, you will make it, guys. I'll see you in the next video. Please subscribe.